Welcome back. The big global line has been the surge in Brent crude prices on account of supply pressure globally. Manisha Gupta is joining in now to talk about that and more. Manisha, what's the one commodity that you're tracking today?
Oh, absolutely, crude oil prices, because, until now we were tracking the Brent, which has been holding above $90 a barrel, but you have the WTI crude price is also trading above 90, and Brent is at 94.5. It has been a gradual but one-way direction for the crude oil prices, which has been on the higher side. So we are trading at a fresh 10-month highs for the crude oil prices. This is going to be the third straight week that you are looking at gains coming in for the prices. And when you look at the kind of gains that we put in for this week is about 3%. On a monthly basis, we have seen strong gains come in for the crude oil prices to the tune of 15%. And since the month of June, we are up 15% as well. For the year, for now, we are now up nearly by 13%. So positive cues coming in every chart that you see, near term or a longer term for that matter. If you look at the prices in this year until now, we started the year slightly on the weaker side at around $82. The reason that you have seen strong run up in crude prices also is because in last 2 or 3 weeks, every data that you pick up, there is a strong hedge fund buying coming in for the crude oil prices. Also, additional to that, the China cutting its RRR by 25 basis points for a second straight time in this year is also supportive. China clearly has been importing a lot of crude, even as the economic data number has been on the weaker side, but the Chinese import numbers have been positive, and with this now push coming in, you are looking at even higher prices expectation. As I was saying, if you look at this year, we started this year with 82, saw a decline up to 70 in the month of June, and we're trading at $94 right now. So from June, the run-up for the crude oil prices have been quite strong. This also is a period that we have seen OPEC and allies, especially Saudi Arabia and Russia, continue to talk about output cuts, and they have actually managed to bring the crude prices to 90. The major run-up in crude actually has come in these 3 weeks, where we saw the prices gain up from 82 to 94. This is the fourth quarter estimate, and this is the number that the crude prices really seem to be surging on right now. The output cuts, the supply concerns, the strong demand expectations mean that by the fourth quarter of this year, we could be looking at a deficit. Now, this is the deficit estimates that various agencies have put out, and most bullish clearly coming in from OPEC there. We also are looking at strength continuing because the demand estimates have been on the stronger side as well. So for 2023, the demand estimates feature between 1.8 to 2.4 million barrels per day. But whichever way that you look, it's more than 100 million barrels per day of a day consumption that the global market seems to be looking at, and that clearly has been supportive. Let's take you to the forecast then, and 94, 95, 100, 105 is what we've heard from Saxo, Probis, Goldman Sachs. They're all bullish on crude oil prices, and they have been. I mean, these are forecast as long back as the month of June, and have continued to hold on these levels. 90 to 95, 90, Bank of America, fat profits. Wood Mackenzie believes $88 a barrel, but Wood Mackenzie on CNBC-TV18 also told us that they could be looking to change this, revise it on the upside there. The least of bullish actually have been coming in from Indian brokerages, though. We have seen them come out with levels of 88 to 98 on the higher side. Having said that, the markets do believe that we are overbought as far as crude prices go, but the momentum still continues on the higher side.
Okay, well, Manisha, thank you very much for that.